Welcome to Eagle City Multifamily Show, where we talk all things apartments. I'm excited to feature our fine guest, Jade Lay, today. But this is not financial or legal advice. It is simply professionals sharing what we do. So you too can become invested in apartments if you desire. So Jade, welcome to the show.
Herb, I appreciate you extending the offer. Very, very excited to be here.
All righty. Yes, let's have some fun with this. And if you would mind talking about like how you got started in apartments, a little bit of your background experience.
Sure. Well, I'm trained as an engineer and a lawyer. That's in my professional capacity. I started investing in real estate about 12 years ago. So I started out in single family, buying homes and leasing those out, and started a company. And we expanded into Arkansas and Memphis and here in Houston, where I'm based out of. So that's where I started, and eventually I moved into apartments, and that's most of what I do now on the real estate side of things. Is that I syndicate, large apartment deals where we buy apartments anywhere from 200 units or more in some major markets around the nation, and we raise equity from our private investors, and we go out and find good investment opportunities that we believe will generate a double-digit annualized return to our investors. And we've been pretty successful at it, and I mean we're still actively now out there looking for deals and closing deals. So,
wow, that's amazing. We've known each other for maybe a year or two so far, and in the same apartment advisory group. And I'm amazed at what all of you've done. Like approximately how many doors do you have under management or ownership?
Currently now I have a little bit over 3,000 doors under management.
That's incredible. Mm-hmm. So when we talk about doors, we're talking about units, right? Right. So we total them all up, right, from different complexes, from different locations, right? So that's amazing. Yeah.
Yeah, I mean it's been quite a ride, but I feel like I've just scratched the surface. I'm just getting started. So looking forward to the future.
That's amazing to go from single family to a multifamily, then to that much management, right? That many apartments. Yeah,
it is. Partnerships. That's the way I've been able to scale, is partnering with good operators like myself, and you can go a lot further when you partner with good people. So
I believe that as well. I believe there's a couple very important parts in investing, and if you're interested in investing passively or being a owner, a GP, is to look at the team, right? Who you're dealing with. And
absolutely.
Yeah, I've watched you a lot and know that you're one of the best in the field too. So that's why.
Thank you, Herb.
You're welcome. Yeah. So your background is in legal, right? And maybe in different fields, but let's talk a little bit about the legal work that goes into apartment investing, and like, especially if you're like a passive investor and you want to invest in a deal, and what you should, expect and look for.
Absolutely. Great question. Again, of course, this is not legal advice, and I'm not an SEC lawyer. However, on each investment that we close, we always engage with experienced SEC attorneys. So SEC, that stands for the Securities and Exchange Commission, and they govern what we do as far as sponsors or leads or whatever title that you give the general partners, where we're raising equity from private individuals in order to go out and buy investments. So according to the SEC, there are certain documents that we have to give investors in order to have them read and understand them and then sign those documents. And so if you're investing in these types of deals, but you've never been given what's called a private placement memorandum or PPM, then you definitely should ask some questions. But basically what those SEC documents spell out is that you're investing, and in investing, of course, risks are inherent. And so no investment is risk-free. And so basically the SEC just wants to make sure that investors are told the risks associated with investing in real estate. And so that's basically what these SEC documents spell out is all the risks involved. And then also, of course, it's documents there where we gather, investor information as far as if they're accredited, not accredited, how much they're investing in the deal, things like that. But the major part, at least in my opinion, the major reason for those SEC documents is to make sure that the necessary information is being disclosed to investors in a way that it should be.
All right, awesome. Yeah. And so you mentioned the accredited and non-accredited, right? And there's also sophisticated. Would you mind talking just a little bit about that, what that means?
Sure. Well, the IRS, I believe they're the agency that kind of lays out, or it may even be the SEC. I could be wrong, but there are certain rules in place that spell out what qualifies as an accredited investor versus a non-accredited or a sophisticated investor. And so an accredited investor, and don't quote me here because I don't have the exact rule in front of me, but in general, it's a person that has a net worth at least of $1 million minus their primary residence. Or if you're an individual, if you make over $200,000 a year, or if you're a married couple and make over $300,000 a year in income, those are at least 3 ways that you can qualify as being accredited. Okay, there are other ways to qualify, but I don't have that in front of me now. But in general, most of my investors qualify either through the net worth or the income options. Okay, and then a non-accredited investor is basically everybody that's not in that category. In the types of offerings that I do, I can take on a certain number of sophisticated investors. Okay, a sophisticated investor is a non-accredited investor, but they basically have either life experience, education, job experience, what have you, where they can understand what they're investing in. So, and there's no hard and fast rule about what makes you a sophisticated investor or not, but pretty much anyone of average intelligence that can understand what they're investing in, that they typically qualify. So
okay, that's great. That's one thing this show is for, is to help people understand what we mean when we say certain things like underwriting on apartments, and the due diligence and the things that we do to find a great deal, right? and a great investment. So yeah, that's great. Awesome. And so yeah, so if you would mind, I have a couple of questions from the audience here.
Sure.
Yeah, so one of the questions is, what makes you believe in the deals that you invest in? Right, so there's maybe deals that right down the street that you wouldn't feel comfortable investing in, but this deal you do, and so you engage.
Great question. It's a lot of opportunities in the market now. You could have 10 sponsors look at the same deal, and each one of them may have a different opinion on it. So for me personally, I mean, it has to be a deal that number one, that underwrites well. And in my opinion, what that means is that over a 5-year period, I can see a path to increase the income in this property in order to get to a ultimate value of that property, say 5 years out, where my investors, I'm able to double their money or better over a 5-year period. Okay, and so when you underwrite a deal, that's what you're doing, is that you're using market data, what you know about that market, what you know about the competitors, where their rents are, where their amenities are, all of that, and you see a way where you can buy this building, put money into it, upgrade the units, amenities in order to drive up your income. That'll ultimately get you to that value that you need 5 years out to get the returns that your investors are expecting. So, without getting into the weeds, but that's basically what underwriting is. Okay. Some sponsors are more aggressive in their underwritings than others. Okay. It's all, that's why it's important to understand the sponsor that you're investing with and what their investment philosophy is and what their risk tolerance is. You want to make sure that you understand and that you're comfortable with that. So, when I look at a deal, of course, I underwrite it. The numbers have to make sense in a deal, but then beyond that, it also has to be a deal that, ultimately that I feel good about, something that I would be proud to own. And so now, I mean, I'm mostly focused in the higher demographic areas that have a lot of employment growth, population growth, more affluent areas, because now I feel like where we are in the cycle now, that over the next 5 years or so, that those assets in those good areas are going to be able to weather whatever economic storms that we may have here in the future.
Right. Awesome. And yeah, there's some things I look for too, like the school ratings and the crime ratings as well. That's some things that we look at as well. Yeah, so it might be near, but it's in a different, right? The crime rating in this area might be higher. And ultimately, we want to provide a better living area for, a home for people. That's what apartments are, right? It's a home.
Absolutely. Absolutely. And yeah, and again, I mean, you're absolutely right. And that's why now I target more affluent areas because they have the better rated schools. The crime is low. The people that live in the area, they're concerned with things like good credit. And so they pay their rent on time. I find that the better an area, the more affluent a demographic, the less that you have, with a lot of those day-to-day headaches when you're managing a property. Of course, not that I actually manage the property, we hire professional third-party management, but me as the lead or the asset manager, I work with the management company in order to make sure that they're executing the business plan. And so as I'm working with my management company, of course, I hear about all the management, the day-to-day management issues. And just given my experience over the years, I find that, you know, the worse the demographic, the lower the income, all that stuff, you just get more management issues. It's just harder to manage those properties.
Yeah. Wow, that's great information, Jade.
Mhm.
Yeah, so there's a lot of things that go into finding a great deal, right? We're into that a lot, finding, because there's lots of deals in big markets, right? But are they good, right? Do they provide good returns? Like you're talking the double-digit returns, typically doubling money in 3 to 5 years. You know, it's a lot of what we've seen in the past, right?
Right.
And yeah, so
Yeah. I agree. And you know, that most of the deals we underwrite, we pass on because most of them are simply just overpriced. And you know, if we can't see the plan, if I can't see a way to increase that value above what I'm paying over the next 5 years to where I can get the returns that I need to get, then, you know, we just have to pass. And unfortunately, most of the deals that you see, they just don't pencil out. And so we have to kiss a lot of frogs, but
right.
you know, yeah.
Yeah, so here's one thing that I've noticed, and if you can assume a loan, so we're working with a deal currently where we're able to assume a loan at a low interest rate, and it's a fixed rate, right?
Mhm.
So there's typically, you know, 3 big factors on apartment deals that make them great, right? We talked about the ownership team, the leadership team, and then we talked about the location, right? And then another thing is financing. What I believe is one of the top 3 is financing, right? Because
Absolutely.
yeah, the lower we're paying out on interest, right, the better the deal. And so if you're able to assume a loan from a previous owner, which happens from time to time, and if it's a fixed rate and if it's a low rate, that makes a deal great as well.
Yes, it definitely can. And we're starting to see more loan assumptions now, given where interest rates are. You know, I'm actually looking at a deal now where, yeah, I mean, it almost pencils out on a loan assumption, which is, you know, I haven't seen a deal like that in years. And so, yes, I mean, it's very important the type of debt that you put on these investments now. That's very important. That's probably the toughest part about the market now is right now sellers and buyers they're just not they're still not on the same page. Sellers are still up here and buyers are like, nah, man, interest rates are high. I can't afford to pay that now. And so that's what's going on in the market now is that there's being a realignment, adjustment of expectations for owners now.
Right, Jade. I see that a lot too, because interest rates go up and it's harder to get the financing for the higher price they're asking, right? So it's driving the market down. I see that too. They're negotiating for less than their asking price, right? I've seen that a lot as well.
Yeah. You know, and so I mean, most of the deals now it's kind of like, hey, you make an offer and you just wait and see, you know, and sometimes they come back around once they see, okay, well, They're not going to get the price that they want. And if they still want to sell, fine, they'll take the offer. If not, then they'll just wait. So.
That's great. Yeah, thank you, Jade. And I have one more question before we call it a show here. So there's a question I get a lot is, why do you prefer apartments over other asset classes, right? Do you only invest in apartments, or why do you prefer apartments as an investing class?
Great question. I think real estate, residential houses and apartments are still, the best investment vehicles I've been able to find in order to build wealth in a low risk way, patiently. And if you're patient and if you're consistent, you can build a lot of wealth in real estate if you're smart about it. Right now, I like apartments better than houses because, of course, the way that each is valued. Houses are valued based on the comps in the area. So you can buy a house and, in a okay neighborhood, and you can go in and spend a ton of money upgrading it, putting marble and all that stuff in it. But the price of that house is still going to be governed or capped by the comps in that neighborhood. Apartments are not like that. Apartments are valued based on the net income. And basically what that means is that you can have two of the same buildings on the same street, two different apartments. One has a higher net income, and so that property will be worth more than the exact same apartment across the street, because it's either run more efficiently or the rents are just higher because, let's say, the units are nicer, the amenities are nicer, and so they can command a higher rent. So I like apartments now because even in this phase of the cycle now that we're in, where yes, real estate is expensive, but in apartments, I can still force the value up in an apartment in a way that I cannot do that buying houses. See, so we may actually be at the top of the market for houses. So if you're out buying houses, well, it's not guaranteed that you can really improve the value of a house much now, no matter what you do to it. However, with apartments, you as the owner always have the opportunity to force the value in an apartment. So that's kind of the big reason that I like apartments now more than other asset classes and other real estate asset classes. But of course, I like real estate in general better than I like other asset classes like the stock market and all that, because I can have more control over real estate in a way where I can't control the stock market. Most people investing in their 401ks, they don't even know where half that money is at. They don't understand the stock market, what causes it to move up and down day to day. So I like real estate. One of the reasons is because I can control it, I can understand it. And then, of course, lastly, I would say the tax advantages. We don't have time to go into it now, but there are a ton of tax advantages in real estate now that you don't get in most any other asset class. So.
All right. Thank you, Jade. And for the audience, we'll cover tax advantages on another show. But thank you for bringing up the point of how apartments are valued, right? They're not valued on the comps necessarily. They're valued on the income. If you heard what Jade was saying there, the net income, right? So if you can reduce expenses and increase the income by various methods, then the total value is greater. That's amazing. So
amazing. Yeah.
You're right, Jade.
You can print money.
Yeah.
Yeah.
Money grows on apartments, not trees, right? Yeah.
Right.
I love it. And all right, so don't forget to subscribe to the YouTube channel and see you on the next show.
Thank you for having me.